From Bloomberg World Headquarters in New York to our TV and radio audiences worldwide, I'm David Weston. Welcome to Balance of Power, where the world of politics meets the world of business. On the brief today, Sophie Cameron in Hong Kong on China's new coronavirus cases, Matt Boesler in New York on Fed nominees facing some difficult Senate questions, and David Merritt in London on Prime Minister Johnson's big cabinet shuffle. So, Sophie, thank you once again for all your continuing coverage over there in Hong Kong. Give us a sense. Overnight, we heard there were a lot more cases than we thought there were. At the same time, WHO said maybe we shouldn't be too concerned about it. Where are we on the number of cases?
Well, there's several ways to parse that data. Given the revision to the methodology, we saw an uptick in the daily counts to nearly 15,000. But when you break down those numbers, nearly 13,000 of those are represented by cases that fall under this new category, which include diagnoses by clinical symptoms, which then means those can be put to further testing. And the WHO, in the wake of this revision from China, noted that much of those 13,000 added cases date back days and weeks, and do not represent a sudden surge when it comes to the daily counts. But nonetheless, this does mean there's increased worries about how efforts to contain the crisis are going in China and elsewhere. Today, for example, the U.S. confirmed a 15th case, India putting nearly 16,000 people under surveillance, and Japan reporting its first death, bringing the global tally to 3 outside of China, David.
Sophie, of course, all of our concern is first and foremost with the health and safety of the people involved, but we also pay some attention to the economy. Do we have any sense of what ripples this is having through the Chinese economy?
We are seeing some early indicators of impact ahead of the January and February trade figures we're going to get later in March. We saw Chinese car sales take a hit, plunging by the most in 8 years in January. And Alibaba warning of the consequences, a fundamental impact seen on consumers and merchants on the mainland. And we have seen a shakeup when it comes to officials that oversee Hubei, Wuhan, as well as in Hong Kong, amid some of the scrutiny and criticism of how authorities in those regions have approached the crisis. David.
Okay, Sophie, once again, we really appreciate all your great reporting from Hong Kong. That's Sophie Cameron, our colleague over in Hong Kong. And now here in New York, we have Matt Boesler, and he's here to talk about Judy Shelton and the other nominee. And there are two nominees who are getting very different reactions from the Senate today.
Yeah, that's right. So Chris Waller, the research director of the St. Louis Fed, and Judy Shelton, of course, both Trump's nominees to the Fed board. All of the questioning pretty much focused on Judy Shelton today and a lot of her controversial views. Chris Waller kind of sailed through, didn't even really have to field many questions. And so the interesting thing is we definitely expected Democrats to come out strongly against Shelton in the questioning, and they did that. But 3 Republicans also went after her a little bit on different issues. And so that creates a bit of a wild card for her nomination now, because she only needs 1 Republican in committee to go against her to, halt her nomination. And then, of course, if she does make it out of committee, only 3 Republicans in the broader Senate.
So Judy Shelton has been, I think, quite outspoken, sort of a commentator on Fed policy, effectively something of a gadfly, and that may have attracted President Trump to her as a possible nominee. Is she backing off of those positions now, or is she doubling down?
So she was definitely trying to, I think, have it a little bit both ways in today's hearing. One of the lines of questioning, for example, was about the gold standard. And she was kind of saying that, look, I don't advocate going back to the world of the late 1800s and that system that we had now. But she kind of couched it in language that wasn't necessarily ruling out some sort of role for gold in her ideal monetary system going forward. And so that's kind of the, trap that you fall into for someone, like you said, who's been writing a lot about this and has a long paper trail. They're kind of forced to play both sides of some of those things.
At the same time, this is an opportunity for the president to really put his stamp to some extent on the Fed, really have an influence there. I suppose she has to be careful she doesn't go too far over to the Senate side and lose the president.
Yeah, that's right. So again, that's another balancing act. And certainly one of the other things that came up a lot was her comments on sort of international monetary policy relations and how they relate to trade. And obviously trade has been a major initiative of Donald Trump's. He feels very strongly about those things. And that was one of the things that came under criticism from Republican senators today. And so that's kind of one of the things that is leaving her nomination in doubt at the moment.
Okay, thank you so much to Matt Boesler reporting on what's going on with the Fed nominees. And now we're going to go to London and David Merritt, because there's been some big shakeups over there. As I understand it, David, some of that was anticipated. I'm not sure that the Prime Minister intended all the shakeup that he got.
That's right. We were expecting a sort of second-tier reshuffling of his cabinet. No huge names really affected. In the end, we got a big bombshell. The Chancellor of the Exchequer, Sajid Javid, walking out of his job after a face-to-face row with the Prime Minister in Downing Street, essentially over control of the budget that is coming up in a few weeks' time. Bit of a power grab, really, from number 10 Downing Street. Certainly not what Mr. Johnson intended from his reshuffle today. One of the biggest names, arguably the second most powerful person in his government. You have to go back to the 1980s, but for the last time, a Chancellor walked out of his job in this way. So very dramatic. He's not been in the job very long. He hasn't even delivered a budget yet. So we were supposed to be weeks away. Downing Street then briefing this afternoon. They don't know. They cannot confirm whether we will have a budget, in fact, in March. So, you know, Mr. Johnson's economic plans really thrown into disarray this afternoon.
Well, what's interesting, it may not have been what the Prime Minister Boris Johnson wanted, but he surely must have anticipated this possibility, because as I understand it, they already had forced the Chancellor to get rid of his communications person, and now they came in reportedly and said, your top 5 people are gone. They must have anticipated the possibility that he would say, I'm sorry, I can't live with that, which apparently is what happened. He said, I just can't be Chancellor under those circumstances.
That's absolutely right. But, you know, it's a real sign of Mr. Johnson's strength, though, in fact, that he was able to hold the ground or even threaten something like that to the Chancellor. It would have been unimaginable for his predecessor, Theresa May, you know, who had tried, in fact, to perhaps dislodge the previous Chancellor, Philip Hammond, but he stood his ground. Mr. Javid really saw that he couldn't continue in this role. There's been lots of reports over weeks of tensions between Dominic Cummings, the famous chief advisor to Mr. Johnson, and the Treasury. And, of course, Mr. Javid trying to have perhaps a bit more of a traditionally conservative approach with spending. And this is the big question, of course, in that budget. Mr. Johnson making big spending pledges in the campaign to all these new voters in the north of England, big infrastructure proposals that he wants to push through. Mr. Javid really perhaps blocking some of those. We saw a market reaction to the news today, the pound going up, government bonds falling. Why? Because there's an expectation that with Mr. Javid out the way, Mr. Johnson is going to be able to turn on those spending taps, and we're going to see a fiscally expansive government from here on.
Yeah, so much for austerity. I think that looks like it's gone by the wayside. Thank you so much to David Merritt over in London. And now let's check on how the markets are reacting to today's top stories. Joining us now is Abigail Doulat. So a little bit risk off last time I checked.
A little bit risk off at this point, but less so than earlier. We're well off of the lows. In fact, the NASDAQ, that tech-heavy index, slightly higher. So investors really looking past these new coronavirus numbers, making the continued assumption that the global economic impact is not going to be too bad. It won't stretch beyond, like, let's say, a quarter or 2 quarters. It seems to me it's probably a little bit too early to make that assumption, but the fact that we do have stocks just mildly lower at this point, and again, that tech-heavy NASDAQ slightly higher, suggests that they just want stocks to go higher.
And I believe one piece of evidence that would support you is what's going on with commodities, because commodities are coming up that would tend to confirm what you're saying.
Well, so commodities have really been under pressure this year because China is the world's largest user of natural resources. Today, we have a little bit more of a rally there for commodities, which is interesting. So to your point, yes, it does confirm that idea that investors just want in on risk assets, that search for yield. Interesting, though, we, of course, have haven bonds also higher. Exactly. So investors can't quite make up their mind. And on the year, bonds really the big winner at this point. Stocks to some degree are as well. Depends on what index, but bonds clearly the big winner. So some investors are hedging against a worst case or a worst case scenario than what we're pricing in right now around the coronavirus tragedy.
It's fascinating. Thank you so much, Abigail, for that great report on the markets. And now we're going to turn to Mark Crumpton for Bloomberg First Word News.
David, a cruise ship that had been stranded at sea for about 2 weeks after being refused entry by 4 countries finally docked today in Cambodia. Thailand, Japan, and Taiwan and the Philippines had all refused to allow the Westin to dock over fears it would expose them to the coronavirus. Ship operator Holland America Line says no cases of the virus have been confirmed among its more than 2,200 passengers and crew. Nevada votes next and then South Carolina, but top Democrats vying for their party's presidential nomination are looking ahead to the biggest prize on the primary calendar. Super Tuesday, the slate of contests when more than a dozen states go to the polls, is March 3rd. Vermont Senator Bernie Sanders led the popular vote in Iowa and New Hampshire, with former South Bend, Indiana Mayor Pete Buttigieg a close second. In the UK, Chancellor of the Exchequer, Sajid Javid, says he had no choice but to resign. Javid quit today after a showdown with Prime Minister Boris Johnson. Bloomberg has learned that Johnson demanded that Javid fire all 5 of his most senior Treasury aides. Javid tells Sky News he was unable to accept conditions for being Chancellor. South African President Cyril Ramaphosa is delivering his State of the Nation address in Cape Town at this hour. Business leaders have been ratcheting up the pressure on Ramaphosa to announce decisive measures to turn around the economy and fix struggling state-owned enterprises. The speech has been billed by South African business leaders as the most important since Nelson Mandela's in 1994, the first after apartheid ended. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks so much, Mark. Coming up, Bernie Sanders may be the front runner in the Democratic race for president, but just how far in front really is he? We're going to get the latest from Kyle Kondik. He is managing editor of Sabatos Christie Wall. That is next. This is Balance of Power on Bloomberg Television and on radio.
Thank you.
This is Balance of Power on Bloomberg Television and radio. I'm David Weston. Democrats were looking for some clarity from Iowa and then New Hampshire, but did they really get it? There's no question that Bernie Sanders won the New Hampshire primary, but if you do dig a little bit deeper, there are some warning signs for the Vermont senator. Joining us now from Washington is Kyle Kondik of the University of Virginia Center for Politics. He's the managing editor of Larry Sabato's Crystal Ball. You have a new note out that I've read carefully, Kyle. Give us a sense, how far in the lead is Bernie Sanders after New Hampshire?
I think it was common to look throughout 2019 at Joe Biden as being sort of a soft or a weak frontrunner. I think that mantle has passed to Bernie Sanders now. I think he probably has the best odds of any of these Democrats, but I don't know if he's some sort of overwhelming frontrunner either. You look at what happened in New Hampshire, he got at 26% of the vote, which of course was enough for him to win, although he tied in delegates with Pete Buttigieg. And he hasn't shown a ton of appeal outside of his core constituencies, namely younger voters and also kind of the most liberal voters in the Democratic Party. So he's in a good spot, but he's also not blowing out the field. And I think he's benefiting more from sort of the failures of his rivals as opposed to necessarily his own performance.
Could he be helped, do you think, Kyle, by the failure of one particular of his rivals, and that is Elizabeth Warren? It was perceived that those were the two people competing for the so-called progressive lanes in the party. Elizabeth Warren clearly had a bad New Hampshire. This is a neighboring state for her. If she was going to do well somewhere, you'd think it'd be in New Hampshire. Is it going to help Bernie Sanders a lot if, in fact, Elizabeth Warren really is taken out of the race, effectively, if not officially?
Yeah, certainly. Although the ideological composition of this race is kind of tricky in that, yes, Sanders and Warren are pretty similar politically, but some of Warren's supporters seem to have not necessarily gone to Sanders, but instead have gone to maybe Amy Klobuchar or Pete Buttigieg. So it's not like they're competing for precisely the same voters. But I think if you look at this more broadly, if you're thinking about this in 2019, you probably would have thought, well, Warren and Joe Biden are Sanders' biggest rivals, and both of them have done really terribly in these first two contests. Warren did okay in Iowa, but really did poorly in New Hampshire. So between Biden and Warren faltering, that's where Sanders, I think, really benefits.
So the former vice president, Joe Biden, has had two disappointing outings now, first in Iowa, then in New Hampshire. At the same time, he says he really needs and will really do well in South Carolina and Nevada. Does he have that firewall there? Can he do that? Because let's be frank, Iowa and New Hampshire do not represent the country in terms of demographic makeup.
Yeah, and specifically, they don't represent the Democratic electorate in that, the Democrats are a multiracial party. Iowa and New Hampshire have electorates that are 90% plus white. So we knew many months ago that Biden probably was not positioned to do all that well in Iowa and New Hampshire, but because those states are so white and because Biden has benefited from the support of non-white voters, particularly African Americans. But it's easy to say 6 months ago, hey, Biden's not going to do that well in Iowa and New Hampshire, and then to actually live through it and to see how poorly he actually did, not even cracking double digits in New Hampshire. And I just wonder if we're sort of looking at Biden right now as sort of a snapshot of him in the midst of a free fall. We're sort of seeing that in the national polling in that Biden has ceded the top spot to Sanders in the most recent data we have. And he's getting squeezed by Sanders. He's also getting squeezed, frankly, by Michael Bloomberg, who seems to be taking some of the African-American support away from Biden more so than Sanders is. So Biden at least can look at Nevada and South Carolina and say, hey, I might be positioned to do better in those places. But boy, if he doesn't, I don't know where he goes from there.
Okay, and of course, Bloomberg is the founder and majority owner of Bloomberg LP, our parent company. Let's talk about not just the race for votes, but the race for money, because that counts a lot as well, as you know, Kyle. How are the candidates doing there? How bad is Joe Biden? How good is Bernie Sanders? Because when we're looking towards Super Tuesday, it's going to cost a lot of money to buy all that media in California and Texas, places like that.
Yeah, and Biden's fundraising was never particularly good. And in the most recent fundraising reports, I think he only had about $9 million cash on hand, which is not that much money in the context of a presidential campaign. You know, someone like Amy Klobuchar hasn't had a lot of money to build out an operation in these future states. But it sounds like she's getting some money in based on her good performance. Sanders has demonstrated a lot of small dollar fundraising. So again, that's another challenge for Biden is does he even necessarily have the resources to continue? What often forces candidates out of these races is not necessarily the will to continue, but just the money to make it all work. I don't know what Biden's status is as of today, but as of the most recent fundraising reports, he wasn't doing that well, and nothing has really happened to think that he would get a big influx of cash.
Kyle, the ultimate goal here is not just winning the nomination, but winning the presidency. Did we learn anything from Iowa and New Hampshire about the possibility of the Democrats coming out in enough numbers to vote out President Trump? What about voter turnout? It was somewhat disappointing in Iowa, somewhat better, apparently, in New Hampshire.
Yeah, I think that's right. The Iowa turnout was not that great. New Hampshire was better than 2008, which, of course, was a very high-interest primary, but that was also 12 years ago. You have to account for population gains. You also have to account for the fact that there wasn't really a contested Republican primary that would sort of compete for voter attention. So I would say that 2020 turnout in New Hampshire was not really as impressive as 2008. But certainly a better sign for Democrats, although I would also say it's not necessarily demonstrably proven that primary turnout is predictive of success in the fall. You know, obviously a party wants more people to participate than less. But you also hear from some Democrats that there are a lot of voters out there who may be paralyzed by the immense number of choices they have, and that they're just willing to wait out the primary and vote against Trump in the fall. So I think there are some kind of mixed signals on the turnout front.
So, Kyle, as you know so well, it's not just how many people vote, but also why they're voting and who they are. Do we have any crosstabs yet? Any of the things from the exit polls would indicate the demographics of who turned out and voted? What happened with the independents in New Hampshire? What issues may have voted the people who did show up to vote?
I would say that while the turnout was pretty robust in New Hampshire, it wasn't necessarily a demographic makeup that was particularly favorable to Bernie Sanders. And Sanders, of course, has run on this idea that he's a transformational candidate who could fundamentally alter the electorate. And while Sanders won, again, he ran a little bit behind his polls. I would not say that he had some sort of dominating showing. I do think it calls into question a little bit his ability to really turn out a lot of young voters in particular to support his campaign. And if the theory of the fall is that it's more about turnout than it is persuasion, I don't know if we've seen great evidence for that from these limited results that the Democrats are going to be able to do that in the fall. But again, the president is not in particularly strong shape himself. You know, 2016, I think, was a race where voters felt like they had two kind of weak choices. I kind of wonder if a lot of people may feel that way this November, too.
Fascinating. And of course, President Trump went out there and sucked a lot of the oxygen out of the room with that big rally up there. It looks like he's going to basically hound the Democrats right through. He likes to keep the spotlight, and he's pretty successful at it. Oh,
absolutely. Yeah, and he has to insert himself in every story. I sometimes wonder if the president would be better off if he would just fade into the background a little bit. It seems like his numbers sometimes get a little bit better when he does that. But that's certainly not in his DNA, and I suspect that as these Democrats barnstorm the country, not just the shadow of the president will be following him, but the president literally himself will be doing these events, as we saw in New Hampshire, and I'm sure he'll do that in the future as well.
He did in Iowa as well before that. He went out to Iowa for a visit just before the caucuses. Okay, many thanks now to Kyle Kondak. Always great to have Kyle with us. He's managing editor of Larry Sabato's Crystal Ball. Still ahead, MGM Resorts is in the crosshairs. The company is dealing with the fallout from the coronavirus, and now the CEO is leaving. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and on radio. I'm David Weston. Time now for our stock of the hour. MGM Resorts is one of the day's worst performers. The stock is sinking more than 5% as investors digest a slew of bad news. Kaylee Lines is here with more. Slew of bad news. I think that understates it, if anything, Kaylee.
There's a lot of things that are not working in MGM's favor today. One is that fourth quarter earnings and results really just disappointed. Morgan Stanley saying they were weaker than already low expectations. On top of that, the company's CEO, Jim Murren, announced he is going to step down prior to the end of his contract. Now, he's going to stay on with the company until a successor is named, but this really was a surprise. He's been at the helm since 2008. He's been with the company for over 20 years, and reportedly some of this may be due to conflict with the board and some other activist investors over their asset-light model that the company has recently switched to, selling off its real estate and leasing it back. Regardless of whether or not that's the reason, this comes at a period of really great uncertainty for MGM. On top of all of that today, the company withdrew its guidance for 2020 because of the impact on of the coronavirus. They say it just makes its outlook really look unpredictable. It's an issue not only in Macau, where we know casinos are shut down. The company's saying they're losing $1.5 million a day while that shutdown goes on, and there isn't a clear end in sight, but also in Las Vegas, because you're not getting those Asian travelers, those baccarat players coming over to Las Vegas to play here in the U.S. And those numbers are down about $100 million in 2019 than they were the year before.
But they're going to make it up to shareholders by buying back some of the shares, right?
They're going to try. So they did announce that share buyback, trying to sweeten some of this bad news a bit. $3 billion share buyback that included a $1.25 billion tender offer that started today. And they also upped the dividend by about 15% to 15 cents. But that same Morgan Stanley analyst I was talking to earlier said that buyback program really has limited incremental value, given the fact that the underlying business and the stock are just really not performing well.
Yeah, it's a puzzle to me because the board was there when he went to the asset light and he sold the real estate. So what's changed since then? The board must have approved this.
Yeah, and I would say there's mixed reception on the street to this as well, whether or not this is a good idea. Now, there was some activist pressure involved in that as well. Yeah. Some on the street really do like this asset light model. There's supposed to be a lot of more people coming to Vegas because of the new football stadium, et cetera. But some are saying that this really wasn't the correct direction to go. Regardless, the deal, it's already done. And the question is, what does the company look like now going forward under a new CEO?
In any event, a lot of changes at MGM Resorts. Okay, thanks so much to Kaylee Lines for that report. Up next, the ripple effects from the coronavirus are spreading wider and deeper by the day. What's it mean for the global auto industry? We talk with Sig Huber of Conway McKenzie. This is Balance of Power on Bloomberg Television and on radio. From New York, this is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, former White House aide Hope Hicks is returning as a senior advisor to the president. That reunites him with one of his closest confidants. Hicks was White House communications director. She left in 2018 after admitting to Congress she occasionally lied in the course of her job. In Hong Kong, schools will remain closed for at least another month as officials try to prevent the spread of the coronavirus, now known as COVID-19. The city's students haven't gone to school since the scheduled Lunar New Year break began in late January. Hong Kong has 50 confirmed cases of the virus and is on the front lines of the global battle to contain the illness. The United States and the Taliban are nearing an agreement aimed at ending the 19-year war in Afghanistan. Defense Secretary Mark Esper says the two sides have negotiated a proposal for a 7-day reduction in violence and have made progress on a broader deal. In September, President Trump called off the talks after a suicide bombing in Kabul that killed an American soldier. In Moscow today, Russian President, Vladimir Putin made his case for amending the country's constitution. The proposed changes cover a variety of topics ranging from the protection of traditional values to the country's status as a nuclear power. This is widely seen as part of President Putin's efforts to extend his grip on power after his current term ends in 2024. Putin says the changes would only take effect if Russia's citizens approve them in a vote. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks so much, Mark. The death toll continues to climb from the coronavirus, as do the number of those infected. And although the human loss and suffering is front and center, of course, it's also having some substantial effects in the business world, including the auto industry. We welcome now an expert in the global automotive supply chain. He is Sig Huber, is Senior Managing Director at Conway McKenzie. That's a division of Riveron. And earlier, he was Global Director of Purchasing at Fiat Chrysler. So, Sig, welcome. It's good to have you here.
Thank you very much.
So let's talk about what we know, basically, what's going on in the auto industry in China. I know that the specific area where this was developed was actually quite important to some of the auto manufacturers.
Yeah, it's a very important part of the country for production of automotive components, actually. And so a lot of the parts that go into the vehicles at maybe a tier 2, tier 3, tier 4 level could be coming from this region.
So we've seen already that obviously the number of sales of autos in China has just fallen. And let's be honest, it was not that robust before. China had been struggling for over a year now with auto sales. But what is the likely possibility of a supply chain problem where even when it starts to come back up, they won't have the parts?
Well, we're already seeing a supply chain problem in the automotive industry. Those automakers who are producing vehicles in the APAC region are already suffering shortages of supply. The automakers in Europe and Latin America and North America are enjoying a little bit of a buffer right now because they have parts traveling by ocean, so they have some safety stock by way of the transportation network.
So if you can, give us a sense of the timeline here, because we just heard in the news that they're closing the schools in Hong Kong, for example, for another month, well into March. As this thing goes on, at what point will we really see this start to show up in Europe, in the United States, in Latin America, places like that?
Yeah, so in Europe, there's already been reports talking about maybe 10 days to 2 weeks out before they start to see some real impacts to their supply chain. Now, there could be some countermeasures they could put in place, like putting parts on airplanes and flying them over instead of putting them on ships. But probably 2 weeks out is when we may start to see some issues in Europe. North America and Latin America are probably 3-4 weeks out before we see any type of major disruption.
Right now, as far as we know, workers can't go to the factories. They can't be there. They can't work. They've shut everything down. Once people can start going back to factories, what's the recovery like? And when we talk about a V recovery as opposed to a U recovery as opposed to an L recovery, what is it in the supply chain in the automotive industry?
Well, in the auto industry, when people come back to work, it's not always possible to get everybody back to work at the same time and get the lines back up to full speed in one day. It may take a couple of days. And the other interesting aspect of this is you have to have all the other infrastructure, the transportation infrastructure, the customs, the ports, all those need to be up and running smoothly as well for the parts to be flowing.
What automotive makers are more vulnerable, which are less vulnerable, as far as you know?
Well, at this point in time, it's already been reported that Toyota, Honda, Hyundai, Tesla have had to cease operations in the APAC region. Tesla has just come back up and is producing vehicles again. The others are hoping to start next week.
What about General Motors? Because they have a fairly substantial Chinese operation.
Yeah, General Motors would be included in that group.
Yeah, fascinating. So if you're a supply chain person, which you were for Fiat Chrysler, what are you doing to manage this right now? So
what the automakers do in a situation like this, and let me actually take a step back, because when automakers purchase parts for vehicles, about 75 to 80% of the content of the vehicle is actually produced by suppliers. And a lot of the parts that are purchased actually have a lot of subcomponents. So if you think of something like a shock absorber or a steering wheel or a seat, there could be dozens or even hundreds of subcomponents in those parts. The car companies do a very good job of managing their direct suppliers. They manage their operational performance, they manage their financial performance, they do on-site visits, and they're very close in the way they manage their supply base. But they don't really have visibility to those sub-suppliers that they didn't source further down the supply chain.
Well, and we went to just in time some time ago. I think, was it Toyota that led in that, basically? So we didn't have a lot of warehousing of parts. How is that affecting this? Because as a practical matter, you don't have people just stockpiling a lot of parts they can use.
Yeah, so just-in-time delivery is meant to minimize the inventory levels that are being carried by the automakers, and it's become a standard practice in the industry. So obviously, the less inventory you carry, the less margin for error you have when you have some supply disruptions like this. But the industry is not. This is not a foreign event for the industry. There have been lots of issues, whether it's ports, strikes at the ports, or the very devastating earthquake and tsunami in Japan back in 2011. So the industry is used to being adaptable and has proven itself over time to be very, very resilient to adjusting to these types of disruptions.
This doesn't happen in a vacuum. There was some softness in North American auto demand. There's been softness in China, as I talked about before. How does this compound that problem? And what pressure does it make, put not necessarily on the big auto manufacturers, but on a lot of those sub-part suppliers? Because some of those are not very big operations, I assume.
Yeah, we're not seeing, at least in the U.S. market right now, any type of an erosion in the sales volumes and production volumes. We are seeing it in China, and we were seeing that prior to this happening. And I believe that as we move forward, this is going to have a continuing impact on sales of vehicles in China, because once we get everything back and running and we're making cars again, we have to get people back in the showrooms to start buying those cars. And so I think that the delay on the sales side in China could be a little bit more protracted.
Okay, really appreciate it. It was very interesting and informative. That's Sig Huber. He's Senior Managing Director with Conway McKenzie. Coming up, the FTC is planning to examine past acquisitions by big tech companies. We'll dig into the details in our Antitrust Angst segment. That's coming up next. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Well, if antitrust law is about encouraging competition, I guess it's only fair that some of that competition should be among the regulators themselves, though it may not make it much easier for the businesses that they're regulating. The FTC this week fired the latest salvo in its struggle with the Justice Department over going after the tech industry, announcing that it's demanding information on hundreds of small acquisitions the big tech companies have made over the last 10 years. The source of our antitrust angst for today. And we welcome Jennifer Rhee. She's Bloomberg intelligence analyst for antitrust litigation. And Kevin Arkut. He is co-chair of the antitrust group at Kasowitz Benson Torres and former director of the FTC Bureau of Competition. So I'll start with you, Jennifer. This came across the wire, and a lot of people sort of said, oh, my goodness, they're going to undo all these deals. It's not quite clear that's what they're doing.
No, I really don't think that's the purpose here at all. This doesn't have an enforcement purpose. These 6B investigations, which have been used in the past, are really information gathering and oftentimes just meant to inform the FTC. And I think in this case in particular, the FTC is very concerned about the deals in the tech industry that have occurred in the last 10 years that have flown under their radar because they weren't HSR reportable. Maybe they just didn't reach the threshold or they were within one of the safe harbor exemptions, and wondering whether there's something they need to do going forward to try to catch some of these deals, particularly where the tech companies are buying up nascent competitors.
So Kevin Arkut down in Washington, you know about this stuff so well, having been in there. Is that what this is about, figuring out, are we not catching some things with Hart-Scott-Rodino that we should?
Yeah, to be sure, that Jen's right that they're looking at this from an educational standpoint, if you will, but I very much think that their ultimate objective is to find transactions that they can challenge. The size of a deal doesn't necessarily equate with its competitive significance. And who knows why a company makes an acquisition, especially a small one, in certain circumstances. It may be just to buy up that company's technology or their intellectual property rights in order to block others. It may be that this smaller company has great R&D with a disruptive technology that could end up competing with the monopolist. And so they buy that company up and then they just kill off the technology. So I think that there are hundreds of deals to look at, and I think that the government's going to look at both that and the overall corporate acquisition strategy of these companies to see what they're up to.
How far back can they go in time? Do you know? I don't know what the statute of limitations is. I know that you can undo a deal once it's done, theoretically at least, but how far back can they go?
Well, in terms of the 6B investigation, they're going back to 2010. But as a legal matter, the government can actually go back as far as it wants. There's a Supreme Court precedent on this. Some going that sometimes 20 years afterwards, if they want, they can go after it. They look at the market conditions as they are now. Now, it's very rare that the government actually does that, but there is precedent for it.
Okay, so Jen, we have to go with the other story that we've gone to again and again and again. T-Mobile Sprint.
Right.
I would say they're finally done, but maybe not quite so much done.
Well, they're really there. I mean, they're very close. They have a few small hurdles, which I don't think are going to get in their way of closing. They're still waiting for what's called Tunney Act approval. Yeah. This is where a federal judge has to sign off on the Department of Justice's settlement. That's been pending. That's in D.C. District Court. I don't think they're going to have any problem getting that. That's underway, I would think, even in the next month. I believe they still need a California Utility Commission, but I don't think that'll get in the way of closing either.
Well, Kevin, to be clear, what they did get is they got a federal judge to say, you know, state attorneys general came in to try to enforce the antitrust laws. Thank you very much, but this is okay. We'll go ahead with it. There could be an appeal from that, right?
There could be. I think it would have very low chances of success. What's in it for the states? What the states got out of this was reaffirmation from this judge that they do have the right to act in the special interest, in the public interest, even with respect to national mergers. But on the other hand, they got handed a very significant and frankly somewhat embarrassing loss, given that they interrupted the Justice Department's investigation and during the pendency brought their own case. And the judge said the federal government did fine here. There's no reason for you states to be involved, and refused to find liability.
Now, part of what the federal government did fine was say you've got to restructure this deal a little bit, and you've got to bring in a new competitor essentially in the marketplace, right? So could they have gotten this same ruling if the federal government hadn't changed the deal on them?
Well, that's a very interesting question, because in fact the judge says there's no liability here. So you might wonder, did these parties give up things that they didn't have to? But on the other hand, it's very clear when you read this opinion, and I think it's something like 170 pages. The judge takes a long look at what it is the Justice Department and the Federal Communications Commission got out of the parties, including the divestiture of a lot of assets to Dish, with the thought that Dish would become a fourth player in this market. And so I think I wouldn't have bet on the same result if the federal government had not stepped in.
Jen, before we get too sanguine about this, is this that Dish is that strong a competitor? Is that Sprint was so weak by the time the deal happened that they said, okay, we better let this go ahead? You know,
it was a combination of all of that. And part of the reason I was a little surprised after having attended this trial with this decision is because if you took each of the defenses individually, none of them quite made it, none were dispositive on their own. And the judge actually agreed with that. He said each one of these alone doesn't really do it, doesn't really get you there, rebut the presumption of anti-competitive effects. But when you look at all of them, Dish has a remedy, Sprint being weakened, strong efficiencies in 5G. If you put them all together, it's enough to rebut this presumption, and the deal is not anti-competitive because of that.
But this is a great point, Kevin. If you're an appellate lawyer, that tells you it's going to be harder to get a reversal. It's really hard when the trial judge says there's no one thing here. It's this whole melange. You have to put it all together, and I put it all together and come out with. It's hard for a court of appeals to come and say, no, I disagree with your assessment of all those factors.
Yes, and I think Judge Marrero had that well in mind. The entire first part of his opinion talks about the imprecision of the standard, whether to determine that a merger is anti-competitive. Said there's a very fuzzy crystal ball, and all the experts, all the money in the world doesn't really sum it up. He says he's relying on his experience as a trial judge to look the witnesses in the eyes and to make credibility judgments. So very hard to reverse.
Yeah, that's a tough appeal. I can tell you from experience. Okay, thanks so much to Jen Rhee of Bloomberg Intelligence and Kevin Arquette of Kasowitz Benson Torres. Coming up at 1 o'clock this afternoon, I'm going to be speaking with John Newman of Miami University Law School for more on the T-Mobile Sprint deal. Sticking with legal news, President Trump's tweet calling Roger Stone's sentencing recommendation, quote, ridiculous, may have gotten the Justice Department to withdraw the recommendation. It may have gotten 4 prosecutors quit, but will it have any effect on the person who really gets to decide, the federal district court judge who will impose the sentence? We welcome now David Variakis, who is written for Bloomberg today on the Honorable Amy Berman Jackson. David, thanks for being here.
Thank you for having me.
Okay, so as I say, it looks like the president's had some influence in the Justice Department, but federal district court judges don't typically like a lot of interference.
That's right. And just to back up, what set all this off is the original prosecutors in the Roger Stone case said that he should get 7 to 9 years in prison. And President Trump tweeted about that, his displeasure and his disgust, really. And then the Justice Department lowered the recommendation to 3 to 4 years. So now the question is, will any of this affect Judge Jackson next week?
So what's the discretion the judge has?
The judge can sentence anywhere from probation all the way up to the statutory maximum in this case, and the judge has to decide the facts and the law in the case. We've talked to people who basically say that Judge Jackson is unlikely to be influenced by all the political noise around her, and she's going to review the facts of this case and compare Roger Stone's conduct with other people that are similarly situated who, in his case, he obstructed justice, he lied to Congress, and he tried to tamper with a witness.
Yeah, one thing that will bring federal judges together, whoever they were appointed by, because as I understand, Judge Jackson was appointed by President Obama.
That's
is that correct? But no matter who appointed them, one thing that tends to bring them together is outside interference, especially political attempts at political interference. We've seen that already from Chief Justice Roberts, where he pushes back on President Trump. So I would think that federal district court judges and Court of Appeals judges and the Supreme Court would say, no, you don't do that.
Right. I'm sure that Judge Jackson in some way will address it during the sentencing of Stone, and she's going to say that I'm fashioning this sentence based on the whole man before me and the crimes that he committed, and not on what the politicians want.
David, do we have any sense whether President Trump may have a point? I mean, if you look at similar crimes in similar situations, was this an overly harsh recommendation from the Justice Department?
It seemed to be above what defendants normally get for this type of crime, and it's the judge's discretion to follow the recommendation or not. I talked to a retired judge yesterday who said that the typical sentence in this type of case is, say, a year to 18 months.
Wow.
But what Roger Stone did in this case after he was indicted...
Well, see, that's the problem, because he misbehaved and the judge kept having him in and
right, didn't help him. At one point before the trial, he posted on Instagram a picture of the judge and next to it a picture of a rifle scope, which could certainly be construed as a threat. And now she had the option of locking him up pre-trial, but chose not to. So she appears to be, in this case, trying hard to give, the appearance and the actual fact of impartiality.
Yeah, but President Trump has actually tweeted about her as well at this point. It's not just the prosecutors.
Right. And the real question is, after he is sentenced, after Roger Stone is sentenced, will Trump pardon him?
That is the question, of course. Okay, thank you so much to Bloomberg's David Variakas. Coming up, President Trump faces a rebuke from the Senate over his action against Iran. What it could mean for U.S. strategy, that's coming up next. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. The Senate is scheduled to vote later today on a bill to limit President Trump's ability to strike Iran without consulting it first. Yesterday, 8 Republicans joined with Democrats on a procedural vote to allow the measure to come to the floor. Joining us now from Washington is Bill Ferries, who heads our national security team at Bloomberg News. So, Bill, welcome. If this goes forward, it could be something of a rebuke to the president.
It certainly will be, because, of course, if it passes the Senate, it's going to pass the Senate with some Republican support. And at least 2 Republican senators have signed on as co-sponsors of this legislation. That said, it's not expected to pass with a veto-proof majority, and President Trump is already warning Congress that he thinks passage of the bill is effectively a sign of weakness in front of Iran.
Yeah, indeed. Is there a question also about constitutionality? Because presidents historically don't like the War Powers Act much anyway.
Exactly. And, yes, I think there is a constitutional issue here. I think the presidents of both parties have long argued that they need the flexibility to make quick decisions and strike against American enemies, sometimes preemptively, without having to seek formal approval in Congress.
Part of the tussle, the yin and yang, the pulling and pulling, pushing back up there. Let's talk about Afghanistan for a moment, because there was a report that crossed that, in fact, Mike Esper, the Secretary of Defense, has now said they've got sort of a tentative 7-day cooling off deal with the Taliban that might lead somewhere else. What do we know about that?
Well, this is something the administration's been working on since before last September, when President Trump tried to have a bit of a peace summit at Camp David, Maryland, with Taliban and Afghan leaders. The idea here is that a 7-day cooling off period in which all sides would really scale back their activities would allow a U.S. Taliban deal to go through that would eventually foresee the withdrawal or the withdrawal of most U.S. forces. That will be contingent on the Taliban entering talks with the Afghan government. That's something they've largely refused to do, saying that the Afghan government that's there now is basically a puppet of the United States.
But could we withdraw our troops and not have it fall to the Taliban? Do we know?
Well, right now, the Taliban are basically at their strongest since they were ousted almost 19 years ago. They contest or control about half of Afghanistan, so it's a pretty large swath of territory. And they have always had an ability to strike in the capital, despite the heavy U.S. presence. So there's some doubts about how long the government could survive if the Taliban, if it isn't working somehow cooperatively with the Taliban.
Bill, as you know so well, we went into Afghanistan originally because al-Qaeda was using it as a base. It was really to get rid of al-Qaeda so we couldn't be hit again. What is the situation right now with terrorists basing themselves in Afghanistan, whether it's al-Qaeda or Islamic State or others?
Well, there has been an Islamic State presence, and that's added to some of the chaos there, as both the Afghan government and the Taliban have fought Islamic State Khorasan, which is basically the local branch. The Afghan government says that they've helped push back on that quite a bit, but there is, there's a lot of weapons in the country. There's a lot of different leaders who have their own interests at stake that are separate from both the Taliban and the government. So it's still a fairly chaotic situation.
Okay, thank you so much to Bill Ferries, who heads our national security team for Bloomberg News in Washington. Coming up, Balance of Power will continue on Bloomberg Radio. In our second hour, we're going to talk with William Reinsch. He's the chair of international business at CSIS. There are reports now that the administration, the Trump administration, may be about to fire a warning shot across the bow of the WTO by raising tariffs unilaterally. It could shake our entire international trading order founded after World War II. We're going to talk with William Reinsch about that. This is Balance of Power on Bloomberg Television and on radio.